Hi, everyone. It's about a few minutes to 5 and Sunday afternoon, and I've had a couple of questions about a trade that I made on Friday. And it was somewhat of an unusual trade for me, much riskier and quicker than most of the trades that I put out to the subscribers. And I did not put this one out to the subscribers, but I did, in fact, post what I was doing. So, I was trading Apple after the Goldman downgrade on Thursday and the follow through on Friday. We got all the way down here to the lower Bollinger Band. And we just don't do that very often without seeing it go back. We had it here, but of course, this was the initial sell off after the COVID news. And in fact, we did come back up. But I was more interested in the fact that 2 days down here through the Bollinger Band took us right back up. Same situation here, 2 days down, right back up. Same here, same here, same here, same here, and here. And so I decided I would look at this. So here's what I was looking at. First, I was looking at the hourly. Now, ignore this because this is Friday afternoon, and I can't imagine that that's anything but a misprint up at 390 and a move right to 372. But this is what I was looking at right here on Friday. This is the first 1 hour bar on Friday. So I looked at that and I saw it was through the Bollinger Band substantially and thought, okay, well, I need to take a closer look at this. So I went to the 15-minute. And here we are, first down move, and we started back up. So I was looking at this when we were down here around 358 and a half, 359. So this move up did not exist at that point. So let's go to the 10-minute and drill down again. This is what we had in the 10-minute. We had the initial drop, and we looked like we were going to start back up. So let's go to the 5-minute because that's what I did, and this is where we are. So here's the 5-minute. Here's the big drop through the Bollinger Band. We rally back up slightly and come all the way back down, and right around this area, around 360, 359 and a half, 360, I bought literally one of the expiring Friday 362 and a half calls, thinking that if we got a bounce, maybe we would get back to this area around 360, 380. So that was about a $4 move, and I figured I could get maybe a double out of that trade. So that's what I did. So I paid $2.19, and we had this move up. And I looked at it and I thought, well, if we're going to get stuck here at this point, then I'm still going to be able to make a little bit of money. We came all the way back down and tested the low. At that point, they were about $1.90, I believe. They had actually traded at 85 cents. So I held on to it and I just said, it's only one. Let me see how it develops. And of course, we rallied back up. And the next 5-minute bar, we got all the way up to 362 and a half, at which point these options were probably about 3.25, 3.5. And I looked at it and thought, well, maybe we can go up and test this area. This was about 364. So what happened was we, in fact, did do that, tested the area, and I thought, well, we're not going to get through the high here at 64. I think it was 63.99. But in any event, what happened was I turned around and I sold that one call and got $5.20 for it. And I was very happy about it. And we immediately turned lower and got back into the 62, 63 area, 62.60 to 63. And I looked at it and I wasn't going to spend $4 for a call that I had just sold at 520. So I moved out to the 65s thinking, well, if this is going to hold, we're probably going higher. So right in here, right around this 64 area, I bought the 65s. This time I bought two, and I paid $2.10 for them. They immediately continued to rally. We broke through to the 66 and a half area, and those calls were about $3. I sat and watched. We came down, and then I thought, oh, well, that's it. And we started to sell off. And they got all the way down. I had paid $2.10 for them. I believe they got down to about $1.85 or $1.90. Excuse me. And as I was sitting there and thinking about it, I just said, okay, if we break through these lows, these three lows here, here, and here, then I'm going to have to get out of them. It won't cost me much, and I already made over $3 on the other one, so I sat. When we got up here, I thought, oh, this is great. And right in here, when we got to 67 and a half, I sold those. I believe that the price was $4.85. I really wasn't expecting this move back here. I certainly wasn't expecting Apple to actually go up on the day. But, you know, it was 11:15, and I had made two trades on the day, and I just figured I'd call it a day. But the reason that I made the trade was because everything was set up exactly perfectly. These are the kind of trades that I don't recommend. And the reason that I don't recommend them is because the issue of sending out a text through WhatsApp and having you guys be able to act on it immediately is a chance that I generally just don't want to take. Now, if you're sitting there and watching the screen like I am, and I did post it both in the private room and in the public room, exactly what I was doing. You know, if you're doing what I'm doing and you're sitting there and watching, the opportunity is there. But again, this is a trade that you only make when it does exactly what it is that you expect it to do, or it does something unexpected that doesn't jibe with what your bent is on the trade, and it makes you look at the trade. And if you make the decision that, hey, you know, the stock is down from 388 to 356 and it's on the Bollinger Band, then, you know, maybe that's a place to get in. More than likely, it's a place to get in on the next week or the next month's 65s or 70s or even 75s. There's a guy on CNBC who I really like and respect, Josh Brown. And Josh said something a couple of weeks ago that really stuck with me, and that was that the advantage that we as individuals have over the hedge funds and the professional traders is we don't have to make a trade. We're not operating where we have to prove that we can beat the S&P 500 or that we can beat whatever averages people are measuring the hedge funds against. We just simply don't need to trade. And that's always been my attitude. My attitude is if a trade comes your way and it fits your parameters exactly, then that's great, and you make the trade. And if you're wrong, you learn from it. And if you're right, you profit from it. So that's exactly how I made the trade, and I would do it again. The reason that I did it on Friday was because the move in Apple was excessive to the downside. And on the basis of that, I went into an option where I didn't have to pay an exorbitant amount of time premium because, frankly, you know, they were 6 hours worth of trading, and that was going to be it. And besides that, I also kept the position size appropriate. And when I went into the second trade, I was dealing with profit, or 80% with profit. And so that's an advantage that I would take over and over and over again when the trades come my way and fit exactly the picture that I want to see. All right, everyone. Again, hope everybody had a good weekend. Please don't forget to subscribe and like us. Have a good one.